Today, the core inflation levels climbed to a 40-year high, the highest levels since 1982. And that pretty much eliminates the Fed pivot narrative. A lot of people were hoping that the Fed was going to pivot, but at this point, the Fed pivoting anytime soon is like seeing a unicorn in the woods. It's just, you're not going to see it, right? You're just not going to see it, at least for a while. Eventually it'll happen, but it's unlikely when you see core inflation climbing. The Fed cannot pivot when this is happening. So this is the interesting part, and this is what's confusing people, is that inflation's going up. The Fed can't really pivot right now, but the stock market bounced. The S&P got like a nice hammer candle on the weekly going right now. And also Bitcoin has a nice hammer candle going on the daily right now. And this is going against expectations. But, I mean, doesn't that kind of make sense? The market's going against what everyone expected. Everyone was going short, betting against the market, saying we're going to crash. And now we're seeing upside. Kind of makes sense. And I actually positioned for some bounces today in some trades right now, which we're going to talk about in today's video. I'm going to show you guys some of the trades. Let's do the intro and then we'll get started. Earlier today on Twitter, I was saying that if we bounce here, it's going to crush a lot of the short positions. It would likely generate something like a 20% plus God candle. Never doubt Bitcoin's capability to move like this. And since I made that tweet, we have been seeing pretty much continuous upside. Now, this idea may be wrong in the end. We'll see. Bitcoin could, of course, just drop from here. But we saw so much bearish sentiment going into today's CPI print. And people are now like shocked that we're bouncing. But this is, a contrarian move. And it made sense. If everyone's short, the direction of most profitability is up, right? Because we're going to be liquidating shorts, pushing the market higher, going against expectations, all that kind of stuff. Maybe this idea is exaggerated, but I think it's possible. Seeing something like a 20% bounce for Bitcoin off of this CPI print going against the market expectations. I think something like that is totally possible and may still be able to happen. It may still be able to happen. That would land us at like 22,000. And we've seen this before in Bitcoin history. And I'm kind of just going based off of the experience of having seen this many times before, where we're at a point in the trend where we're almost near a new low and everyone's bearish, and then the market reverses and then the shorts just get wrecked and we fly. Total guess, but I think it's actually possible and it may still happen. So let's see. And today's bounce was surprising for some, but we talked about this at length on my channel. We talked about how the seasonality says October is bullish. Be prepared. Recession rally. Again, recession rally. This kind of stuff is very, common in recessions. When you have, everyone gets super fearful, bounce. When everyone gets super confident again and says the recession's over, dump. Now, but that, those bounces can last hundreds of days. So keep that in mind. This is a recession rally. Doesn't mean the bottom's in, doesn't mean the recession's over, but it does provide some really good opportunity to trade these rallies, right? Violent upside, violent downside. If you can capture the moves, you can do super well. So I took a Chainlink long earlier today at $6.68. And that was pretty much right when the inflation data came out, or around that area. And I started to see a reaction in the market up. And I thought, okay, if there's going to be a reaction today, it's probably going to be pretty violent. So I went into Chainlink with some size, 25,000 Chainlink tokens, and doing really well. I have been raising my stops up every time we make a higher low. And people are going to say, Kev, where do you think Chainlink's going to go? Ultimately, I want to be able to hold this long as I possibly can. I want to see this Chainlink daily close green and get some upside continuation. And if it does, if the daily does close green and we start to see continuation, maybe I'll be a little bit more relaxed with my stop loss. But until then, the bounce could still be a fake out. So I'm keeping my stop really, really tight every time we make a higher low, bringing it up. Currently, I'm up 9,300. But of course, I kind of just want to let it go as much as possible and just keep the stop really, really close. And then at some point, I'll stop out with a very handsome profit. Again, this is only a few hours old, and I'm up 9,300. But I'm gonna give it room to go, because if Bitcoin does that 20% pump thing that I'm talking about, well, Chainlink could be sitting, back at 950 in a hurry at this point. With altcoins, those types of moves are possible. So just gonna try to let it go as long as possible. That's my plan. Let the winner ride, see what happens. Keep the stop close, let it go. Now, something else I want to talk about is the stock market. The S&P 500 is playing out this nice bullish hammer, potential bullish reversal right along the 200-week moving average. One thing to remember is that the 200-week moving average is essentially the recession threshold in the past, because we use it as support in the bull markets, and then in the recessionary periods, the bear market periods, we're falling below the 200-week, and we have significant moves below that moving average, very significant. But there's no such thing as a straight line down. Look at 2008. When we came down to the 200-week in 2008, we bounced, significant rally, and you can bet that on the news, people were saying, it's so, we're good, guys, the recession's over, the bottom's in, it's safe to buy. And then boom, we're down again, and that's when the real pain comes in. That lower high actually came in right along this downward sloping resistance. So my point here is that we have to be very mindful of the fact that the S&P is still in a downtrend. And we're just hitting the 200-week now for a couple weeks. So it's possible that just like in 2008, we come up, we bounce up. Everyone says, it's fine, recession's over, we're good, it's safe to buy again. And then in 2023, the worst of it really comes. In 2023, when it's least expected, right? No one's expecting a bounce here. After a bounce like that, no one would be expecting a dump there. And I think that is, the more likely scenario at this moment. Just a guess, but that's just kind of how I see it. Now, these rallies can take hundreds of days. In 2008, after hitting the 200-week, it took 150 days to break down again. And 150 days from now is about March of next year when we would break. So remember, we're still in a downtrend, and until the S&P, actually breaks this downtrend line, I will be, using caution, taking advantage of the volatility, of course, but using caution, not getting too confident on the next bounce. For now, I think we're going to see some upside volatility. For now, I think we're going to get that recession rally that we discussed. And so, the 20% pump idea, kind of just a guess, on some kind of daily, weekly move, would land us at about 22,000. But honestly, I'm not really totally sure what to expect. Like, I don't have any specific targets per se. I'm just looking for violent upside in the midst of a recession. And as things play out, I'll be analyzing the chart. I'll be keeping you guys updated. So be sure to subscribe, hit the like button, and tick the notification bell. And that's it, guys. If you guys want to trade on BitGet, you can use the link below. Of course, it is very risky. Most leverage trades end in a loss, but the point is to cut the losses very fast until the trade works out, etc., etc. That's it, guys. Hope you enjoyed. I'll see you soon.